Hello, this is Andrew from Trend Following Mentor. Firstly, I want to say I'm very happy that my website is back up. Someone attacked it and had all kinds of malware. But anyway, we're up and running. We're back up, and just want to thank everyone that helped me to get the site back up. What we do every Sunday is I do our weekly review. I talk about the stock market. And again, these are my own personal opinions. You should use your own or your own financial advisor. The full disclosure can be read on the bottom of my website right here. Anyway, let's start. First thing is, I look at the indices first and where we are. A very simple rule with one of the things, the value line index. There's a rule by Ned Zweig and Marty Zweig and Ned Davis, where you had the 4% rule. We're almost on a sell based on the value line where we fall 4% from the highs. So I always look at that. You can see right now we're not on a buy anymore on the Dow. And what's very interesting is we're below the 200-day moving average and we're below the 50. That's not good stuff. So very negative on the market. Before any opinions, because opinions don't mean anything. Again, even on the NASDAQ, we're below. I have a very simple indicator. For those of you that have meta stock, I will gladly send you my indicator free. Really, my goal is to help you to try to become better traders because, the real truth of the matter is it's very difficult. This is never easy. All these people that portray it's a weekend course, it's a lot of malarkey. So my goal is to try to help you become better traders. So the basis of this indicator, which is so simple yet so powerful and will keep you on the right side of the market, but it won't avoid whipsaws because nothing will. I use very simple moving averages. And I also include the rule of Ned Davis and Marty Zweig, which has worked over the last, whatever you want to call it, 30 years, 40 years. So right now we're not really on a buy. Look at the S&Ps, same story, below the 200-day moving average. The market reversed, basically, and it's not healthy. At this point, we've been whipped around so much until we've had a direction. We've been in this trading range and been whipped around. It's not easy for bulls nor bears. Let's continue. And obviously, this is also pretty negative too. And it's also below the 200-day moving average. And it's a triple ETF that's pretty interesting, actually. You can make a lot of money in it when the market's healthy. And when it's not, it's time to kind of stay away from it. You can see here, that's a nice run. Going into specific stocks, actually, I'm in this stock. It's only one stock I'm still in. And you can see I got in here, and I've been riding it. But right now, I'm going to sell this stock probably on Monday. Put my stop at the very low here. Maybe it'll turn up. Who knows? But the reason I'm selling is the market's in a correction, and this is showing weakness. You can see yellow is not strength. And again, for those of you that want this indicator, if you have meta stock, I'll send you this indicator. It's here. It's an expert advisor called Andrew Abraham Trending. I'll send it to you gladly. Let's keep on going. Constellation Brands is holding up, but you know what? Very interesting. There was a sell-off on large volume here, but the line of demarcation is this 50-period exponential moving average. I'm not in this one. Basically, what I try to do is I try to identify the strongest stocks and the strongest sectors, both technically and fundamentally. I put in a 7% stop, and I've been taken out as the market has been gotten weaker. Palo Alto is an example of what I was in. I got in here, you can see I drew a line over here. This ugly day here didn't help me, and that's where I got taken out. Had a buy one and a buy two. Had 7% stop losses. What does it mean buy one and buy two? I don't just buy the whole position. I scale into the position. I'll buy 50% at the break point, Then I'll buy 30% when I'm about 3% thereafter, higher, which you can see it did go up. It never made it to the third buy, which is another 20%. Let's keep on going. What's interesting in the weakness here is these storage things, these self-storage REITs. And again, as I say, it's never easy. You can look on the weekly, and I would also always suggest you look at the weekly to plan your trades. Firstly, let's go there. You can see a breakout trade that failed, and you had another one here, and it's working. And what's really surprising, it's showing strength in this weak market. Like this week, it was up 5.66 when the whole market was basically falling out of bed. I'm not telling you to go and jump and buy these things at all, but I'm just pointing it out. Here's another one, public storage REIT. This is an easier one. It was on my radar screen or my watch list, but I thought, it's like I'm looking for things that should have gone up much higher. Again, I was in Facebook. Facebook had something new that I understood. These REITs, they make money in down markets and up markets because, let's say in an up market, people have to put their stuff in storage. And then when times are bad, people downscale. But you can look at it. It's very interesting. Let's go like on a weekly. Here it is below. But this thing, basically, it went from 45 in 2009 up to where it is today. That's a really big move. And it was looked pretty easy to follow. There were only a couple bad patches here, and those could be used as points to add on. So it's something to consider on the next downturn, even though past performance is never going to be future performance. But again, just try to think through the business of what these people do. This stock is it's been on a watch list. It's very, very difficult to have traded so far. You had a gap up, and the rules that we do with gap ups are like this. Draw two lines. And let's say we're at the beginning of a bull market, or at least we had a big sell-off. I would be interested in this stock buying the breakout here and then putting in my stop 7% below. But at this point, the market looks like it's in a correction. It looks like there could be greater weakness than strength at this point because anything can change. But in the norm, it's hitting my watch list, but it isn't something I'm going to go out and jump all over. Facebook was a little bit disappointing. You can see here, this is an early breakout. Here's another point. What I did was, and you can see the color, red is not that healthy. I put in my stop below here, got taken out this day. It was pretty much of a scratch trade. It's not showing great strength. You want to see, this is showing strength when you're green. Green. Reds, obviously, pretty weak. And then yellows are also. But this market really isn't doing it. Now is time to be careful. Even though we're at a seasonal point of the stock market season or the stock market year, the stock market itself isn't really showing all that. It's really showing a lot of weakness going back to here. And then also I would even say more on if you want to look back at, let's say this, because this is showing a greater preponderance of stocks that are just not doing it. And we fell, even though this is triple leveraged, look at this, from 98 to 55. That's a big drop, and we're at 61 now. This is my point. If you want to trade, it is not easy. It is never easy. You need to learn. That's what I'm trying to do. I have a book called The Bible of Trend Following, The Bible of Compounding Money. I have one-on-one mentoring. I have a course, a home study course. I have these videos. Really, my goal is to help you become a better trader. If I can help you anyway, just let me know. Here's my email, and I'm more than willing to help you in any which way. Again, if you have Metastock, I'll gladly send you these indicators. Don't think that they're, the end-all, because the end-all doesn't exist. Really, it's a grueling marathon is trading. Sorry to disappoint you, but this is what it is. It's never easy. You got to stay in the game. Again, if I can help you in any way, please let me know. Thank you.